Yes, sir. Welcome back, family. Did you miss me a little bit? Listen, guys, we got us another crazy one going on so far. I intended to kind of record my thoughts coming into the week yesterday, but recorded it and didn't switch the frame, so I didn't. It was too late to post that bad boy. But what occurred today was a massive egregious, but like I said, the same thing that I've been talking over multiple times. Today we're going to discuss a little bit about Adam Aaron and the 40 million shares that were just dropped and sold in correlation with the pop. XRP breaking news, a little explanation on what's going on with the markets as far as the sell-off, and then, like I said, we got a clip here with our favorite Charles Pizzle talking about the how there's a new evolution of money coming through, guys. But like I said, let's get down to it. We're going to do a little chart action on our little AMC play as well. But let's get down to it. But first, cue that intro. All right, baby. Let's get down to it. All right. Without further ado. Yeah.
All right, folks, my next guest is now talking about how rapidly rates are rising, how things are rapidly changing, and, well, people are going to have to change with it. Part of that change, though, involves painful default spikes. I'm going to bring in now the Kobeissi Letter editor-in-chief, Adam Kobeissi. And, Adam, say it ain't so, my man, but the era of free money is officially over. It was fun, though, while it lasted, but now let's talk about the hangover a little bit. What are you expecting?
Yeah, so I mean, right now you're seeing rates keep moving higher. The Fed's set to pause for longer.
And
that's really been our call.
Little.
I know I was on a couple of weeks ago with you calling for the 10-year note yield to 4.5%. We're still kind of seeing the same pressures. We're now at 4.3%, so we're only 20 basis points off now, which is pushing TLT lower. And ultimately, I think the era of free money being over is kind of a overarching theme of everything we're seeing right now. From rates rising to markets more in volatility, borrowing costs rising, U.S. deficit spending rising. It's kind of all playing into each other, which is definitely an interesting trend.
And it should be noted, guys, that the prices that we have right now are here to stay. There will be no lowering of the price that you're seeing in the grocery stores and on items. There's not going to be eggs are going back down to no. People are being trained currently right now to get used to inflation. Prices never go down. Companies never release their grip on pricing power. So everybody get prepared for that, which means that one, you're going to have to scale up as far as not only your investments, but ways of income. Because like I said, the times are changing. The greatest generational wealth transfer is occurring now. And it's probably the best for you to go ahead and smack down on some of these banger plays where you got a chance. Let's get down.
I'll tell you what's even a little bit more, I would use a stronger word than interesting for Main Street, right? So mortgages or housing is as unaffordable as it's ever been. There are no cheap, affordable cars out there. Rent prices are through the roof. So it might be cheaper to rent than to buy, but either way, you're losing out on the American dream. And it feels like it's going to get a lot worse, Adam, before it gets better. Is that your position?
Yeah, I mean, I think affordability, everything you're alluding to is just about affordability. I think affordability is really going to keep getting worse, particularly in housing, as you mentioned. Buying and renting is historically expensive.
Yeah.
I mean, the median asking rent now is approaching $2,000 a month for the first time ever. The median monthly house payment is now at around $2,800 a month. And it's tough to see a situation where that gets better because with rates rising, you have 90% of borrowers are locked into sub 5% interest rates on their mortgages. Roughly 30% are below 3%.
Right.
And then you have this situation now, which we're calling for, where the Fed's, instead of raising further, it's just going to be a very long pause. We don't expect the Fed to start cutting rates until at least May to June of next year at this point. And in an environment like we are now, you kind of need lower rates to cause housing prices and rents to fall. It's kind of an ironic situation. But as long as rates stay high, in which we believe they will be for the next few months at the minimum, affordability for Main Street doesn't seem to be improving.
So let's talk about your positioning here. You're bullish on the S&P. You're bullish on crude oil. We've talked a lot this show about that. You're still bullish on gold, and you're bullish on yields. Of course, you're bearish on bonds. I'm curious why you're bearish on natural gas.
So natural gas, this has been one of the best short trades of all time. We've been trading this short basically, we've been playing it to this downside for the last few months. Every single time natural gas prices spike, the fundamental situation is just not strong enough for a sustained rally, and that's kind of been our thesis. Technicals are showing lower highs continue to form, and we had this overarching inventory glut that started in the winter. So it was supposed to be a historically cold winter, then it was mild. Then it was supposed to be a very hot summer. It ended up being mild. So you kind of had this big inventory.
I don't know, that heat was getting crazy.
And every time that natural gas prices rally, we just see it sell off. So we've been selling into strength there.
All right.
Whereas on the other end of the spectrum, crude oil, as you mentioned, we've been bullish, calling for prices towards 90 for a couple of months now. We're at 87, 88 after that news yesterday from Saudi Arabia. And we just think OPEC is really committed to higher for longer oil prices, which is something that's honestly surprising many people.
Yeah, you know, ironically, when I saw that people were surprised they extended the...
That's a short-term thing. The motion is going to be to electric. Obviously, there's a gap between, you know, crude oils and natural gas and things like that. But ultimately, all this is going to be solved by that tech sector, like I'm saying. You know, there's nothing that's more conservational than electric. There's nothing that outlasts EV. Of course, they're having to work out these little niches with, you know, if you get like an extremely hot summer like this or an extremely cold winter, that there can be problems with, that sector. But understand, this is a young company as far as Tesla and those that are innovating into solar panels and solar this and things like that. You know, if you're talking about 5, 10, 20 years down the line, the discussion is not going to be the same. But like I said, that's why I'm telling you right now is the time to be purchasing during the greatest generational wealth transfer ever.
The production cuts, I was a little surprised that anybody was surprised. By the way, I'll let the audience know you do like Meta. You like Meta calls here. We got to leave it there. Hey, Adam, thank you very much, my friend. Appreciate it.
Tech. You just said, oh, yeah, he does like tech. Yeah, I bet so. That's where you're going to make your money at. All right, people. Let's dabble down in these things, guys. Looking egregious. AMC currently sitting at a all-time low of $8.69. I knew it was going to happen like this, which is why when I came into this play, I told you how I was going to trade it because I've already been through too many reverse splits. And then again, I was not going to be a victim of AA, but I sold my position up on that reverse split. And like I said, I came up with the hypothesis that there's going to be a pop to come, but no time soon. But if I can catch this stock down near around $1 or $2, hey, I'm in it for the movement because, like I said, I understand that irregardless, once it starts trading fundamentally, it's going to have to be somewhere around the price of center mark or higher. So being able to go from $2 to $20, $25, that is some nice money to make on a pop. But like I said, guys, currently sitting right now, we are in the 80-cent range prior to reverse split. Adam Aaron just led approval of a 40 million share that he's selling 40 million shares. Mind y'all, the stock just rose up to $13. Soon as it happened, dropped off 40 million of what could be 300, 400 million, which is going to show you what the imperative is of this next following thing, guys. Pulling on down, got some more interesting information, not fun information. 1.5 million shares currently available. They're borrowing these shares at a 4.4% interest. But now here's the part, the key thing that I was watching on to see what the sway of thing is. New York Stock Exchange today no longer lists AMC up on that list. They were on there yesterday, as of yesterday, which would have been, let's see here. No, that would have been Friday. They were on the Friday reports today, which this would have been for Monday. Obviously, as they report the next day. No listing from AMC. So, guys, those 60 million failed to delivers and all that is, as of what we see, no longer a concern and no longer listed up there, guys. You got to keep your eyes on this. You got to be having a plan for this. I knew how this was going to go, and we all knew how this was going to go. But now there's still money to be made, not only in other plays, but in this play specifically, depending on if you're going to evolve as a trader. Not telling you to buy, hold, or sell, but I'm just telling you, after being in this play for 3 years, if you think that you're an ape or requires you be an ape because you're going to sit there and let AA do what he wants to over the lunchroom table with you, that's on you. But understand, that's not the definition of what an ape is, a retail investor. Retail investor, you've got to be able to adjust. You've got to be evolving. If you're not evolving, you're going to become victim to one of these CEOs in any of these meme stock plays, which is why I'm constantly suggesting high-tech pricing power, Tesla, NVDA, Microsoft, Amazon, Apple. plays is such, if you want to have that diamond hand mentality where things are going to pay you back dividends and gains, countries of the future, as opposed to if you're going to be in stocks like this, which I put in the last video, that Wall Street is not an area for diamond hands, or I said meme stocks are not a place for diamond hands. This is what I mean. The time is, it's up on you about if you're going to solidly make a plan. You be like, I'm just going to sit here and just buy some more shares. All right, if that's what you want to do, you do that. But like I said, there should be a certain percentage of your money in your long-term investments, about 10 or 15%, maybe 20 at max in your short-term, where you do these swing trades. And you need to have a strategy as far as when you're getting in and when you're getting out of them. Like I said, if they bring the stock down to $1 or $2, I hit that with 1,000. Boom. Oh, that's a smooth little position right there that I would have gathered up. And like I said, a movement to 25, 30. We can make some change off of that. But like I said, you need to have a strategy because he has some 400 million, 300 million more shares are dropping. Y'all just seen him cut that at $13 right up on the first little bounce up off of $10. They had a 7% day just to lead into a 36% sell-off, all-time lows. Keep your mind on it. Keep your mind on it. AMC Ortex data showing estimated 9.56 short interest. Free float is 11.22, which is a measly 7.71 million off the highs of that 211 to 200 million shares that we had showing. Days of cover is at 2 days and 2.45. Cost of borrow 8.32. Utilization 51.72%, guys. Like I said, what they've been doing in this background is something diabolical, but they have degreased that machine. There's a movement in this play, but it's not going to be to 1,000 or 500. You got to understand, a run to $20 is like a run to, a run to $20 would be like a run to realistically like $2. $2 or $3, if I'm not mistaken, because $10 is $1. So $20 would be $2. That's a crazy thing. But now, if we can get that equivalent run to 50 and you bought in at 1, now that's a whole nother player. A manner, like I said, nobody can say necessarily whether you'll get all your money back, but if you can recoup some of your money, their strategy. But you also got to put a new strategy in place to how you're about to conserve and build your money as well. Like I said, I'm going to keep preaching that each and every single day. XRP, baby. Pull it on through. Banger news. XRP Japan, largest bank CEO, confirms that they are expanding payment services through the Ripple Net system, which uses XRP in the Philippines, Vietnam, and Indonesia. XRP, baby. I'm talking about thoughts and yachts, guys. If you're holding all these other meme stocks, but you haven't thrown $100, $200, $300, whatever you can into XRP, you're about to miss out. You're about to miss out. Put it on through. Breaking news. The Federal Reserve has publicly stated that XRP is likely to be used to facilitate blockchain aspects of their new FedNow payment systems after FedNow payment system after various rumors of meetings that took place with Ripple. Pulling through. The FedNow services partnership with MetaBlock for quick fiat stablecoin conversion marks a major milestone in bridging and barrier between conventional banking and decentralized finance at the moment. United States citizens can solely make instant payments with the country through third-party applications like Venmo and PayPal or digital wallets for cryptocurrency. Interesting. The platform is undergoing a pilot phase with over 120 organizations taking part, including recent additions as a U.S. bank, exchange bank, and various payment processors and solution providers. Ripple, a prominent provider of cross-border payments and open-source distributed ledger technology for financial transactions, may be included among the fintech companies that FedNow utilize. Additionally, Stellar Lumens, XLM, a blockchain-based network that offers quicker and more cost-effective method for executing global payments, might also be among the companies that FedNow will use. I already got the potluck up in there. Been throwing the mass majority of my money. XRP plucked up a couple. XLM plucked up a couple. XDC and H-bar just offhand, throwing some cash in just so I can say I have a couple of those shares. But my main banger is XRP, baby. Guys, you can be behind all your life, or you can take a step forward and be like, all right, let me jump in front of what I know is coming. But if you're going to be oblivious to what this game is, the money in this stock game is, like I said, it's going to do its way with eliminating those that cannot evolve and start addressing the stock market as it is. This is full of crooks, criminals, and a lot of opportunities to get rich, all of which are usually in the same space. But like I said, you can't go in here with a naive mind. You can't go in here without a strategy or plan. But like I said, guys, much love to y'all boys. I had to get this one out early so I can get it to where maybe people will be able to watch it as the price inflection is occurring. But hey, much love to y'all boys. Y'all hold it down. Y'all already know what's next, don't you? Yes, sir. DJ B Money, drop that track. Yes, sir.